Hi there, I'm Tyler Bollhorn. Welcome to the Stockscores weekly market analysis for July 13th, 2010. I thought I'd start this week by discussing resistance, specifically resistance at trend lines. If we go into some of the charts here, let's start off with the Dow ETF chart, DIA, and blow that up. We can see that the market has rallied over the last 4 days and really risen up to the downward trend line. I can draw that line something like that. Now the reason I draw the trend line below this candle right here is because it didn't close there. It closed at the bottom range of that candle. And so what we have then is a trend line that is being hit right now, and today in the market the buyers had difficulty pushing prices through that price level. And we can see the same sort of thing if we look at some other index charts. I'm going to take a look at the S&P 500 next. And again, drawing that trend line, we're pretty much at it. We might see a little bit more upside before it gets stuck. Now the NASDAQ 100 is not quite the same. It has failed to rise up to its downward trend line, and so one could argue that the NASDAQ has a little bit more upside to go still, although I'm not sure that the NASDAQ can rise if the Dow and the S&P 500 are failing to rise. My expectation in the short term, specifically in the next couple of days, is that we may open up one morning with some strength, and then I expect that there will be some selling pressure into that strength, which should drive prices lower and ultimately send the stock market down over the next few days. Now it's not necessarily, the market doesn't always act exactly like it should at trend lines, so we could see a little blip through. We could see the NASDAQ here fall short of the trend line. There's a lot of ifs, but on the balance of probability, I would be pretty cautious with the market in the next few days. Let's take a look at some of the other charts that I like to keep an eye on, starting off with the Canadian dollar. Canadian dollar, like the stock markets, has risen over the last few days, but it got stuck at its upward trend line on Friday and today went down. And that's the sort of thing that we may see build on the global stock markets, or more specifically the US stock markets. Unlike the stock markets, however, the Canadian dollar has actually been forming a rising bottom, which is a sign of optimism. So we could see the Canadian dollar pull back like this, but it may be working on a longer term reversal of this recent downward slide. All right, let's take a look now at oil and gold. Starting off with gold. Gold broke its upward trend line last week, and I think gold is more likely to move lower than higher. I would be cautious with gold and gold stocks right now. The oil market is kind of treading water and has been for the last 6 weeks or so. It rolling over a little bit here, and that is, I suppose, to be expected. If we again draw a trend line across the closes, you'd see that oil got stuck there. Now with oil, with any of the stock markets, if we consolidate a little bit at the trend line and ultimately break through, well, that's a bullish signal. It is possible that that happens, it's just not probable that it happens, and so that's why I suggest some caution until you see that actual breakout. Finally, let's take a look at the TSX, Toronto Stock Exchange. It is benefiting from some stability in the global stock markets. People are now putting some money to work in Canada, which has got an economy that is in better shape than many of those around the world. And the safe haven trade, which namely is to buy stuff denominated in US dollars, is starting to go away, and people are starting to take a look at Canada. The Canadian stock market has pretty much been going sideways. That's actually a good thing when you compare it with other stock markets that have been down over the last 6 months. But I don't see anything great here. The market's stuck in a trading range, and this is really a stock picker's market. Finally, US dollar has been moving lower over the last little while, but it is now coming to its to its upward trend line. We're pretty much right there now, and that is going to give that market some support. US dollar might get stronger here. That would be consistent with the idea that the US stock markets will get weaker, because they have tended to be reversely correlated for most of the last 6 months. Well, that has been the Stockscores market analysis for July 13th, 2010. For information on the Stockscores trading desk, give us a visit at tradingdesk.stockscores.com. Or for the other tools offered by Stockscores, visit us at www.stockscores.com. Have a great week in the market and trade well.